So, ladies and gentlemen, you're most welcome. We have Tao Wang, the Green Climate Fund Director for Mitigation.
Merci mesdames et messieurs. Quelques mots en français, vous me le permettrez, en français à Paris, pour dire que je suis ravi d'avoir l'occasion de m'exprimer aujourd'hui sur les engagements de l'Union européenne en faveur du financement climatique mondial. Incontestablement, c'est un volet majeur, sinon le volet essentiel de la négociation qui se joue ici à Paris. Et je veux vous dire une chose très simple, qui est que l'Union européenne a pris très au sérieux ses engagements dans ce domaine. Comme nous le savons tous, l'Union européenne est sur le chemin de la reprise économique, mais elle garde encore des séquelles importantes de la crise. Et pourtant, malgré les contraintes budgétaires considérables que l'Europe a dû affronter depuis Copenhague, nous sommes restés le leader mondial en matière de financement climatique. Nous avons tenu nos engagements de financement et même dépassé largement l'objectif de 7,2 milliards d'euros. Et maintenant que nous sortons de la crise, car c'est le cas, nous voulons aller plus loin, nous avons une ambition à porter, nous avons une vision à partager. L'Union européenne, vous le savez, s'est fixé un objectif de réduction de ses émissions de gaz à effet de serre de 40% 2030 par rapport au niveau de 90. Et pour y parvenir, un cinquième du budget de l'Union européenne entre 2014 et 2020 sera lié au climat. Un cinquième, 20%, 20%. Quel budget public peut en dire autant? La transparence que nous fournissons de manière générale sur nos politiques climatiques vaut tout particulièrement pour l'intensification du financement climatique en faveur des pays en développement. Nous agissons de manière transparente et nous attendons en retour, et nous nous attendons en retour à la plus grande transparence dans la mise en œuvre des actions financées. Le récent rapport de l'OCDE montre que les pays développés ont conjointement fourni au moins 62 milliards de dollars pour le financement climatique en 2014, et l'Union européenne et ses États membres sont les plus grands donateurs publics mondiaux de ce financement climatique. Just to give you a few examples on the achievements within our EU budget. We scaled up grant finance for adaptation from an average of 334 million euros per year to an average of 559 million euros per year in the last 2 years. And total grant climate finance has reached more than 800 million euros per year over that same period. That is more than $1 billion in climate finance annually. With the launch of the new phase of the Global Climate Change Alliance, the EU will invest 350 million euros to support adaptation to the consequences of climate change. This will focus on the poorest and most vulnerable countries, including small islands, developing states, and African countries, both of those countries that you were the ambassador of the EU in. But it does not stop here. Climate finance will need deepening and broadening. More actors will need to become more deeply involved, and we, for our part, will support this dynamic by more than doubling climate finance provided to developing countries from the EU budget. In the years up to 2020, we expect to provide an annual average of more than 2 billion euros in grant per year. We will broaden climate finance by increasingly involving the private sector, and there I insist on the fact that we need to have as well public and private money in climate finance, using blending instruments that could lead to a total investment of 50 billion euros. And we will deepen climate finance by focusing on the poorest and those most in need, and by aiming for a balance between adaptation and mitigation. This is just the money flowing from the EU budget. Of course, EU member states also provide very significant support from their national budgets. In total, we convinced each European country to commit. That was not so easy, but that was finally done in the last ECOFIN Council. In total, the EU and the member states provided 14.5 billion euros in public climate finance last year. The EU and its member states provided about 80% of the funding for the least developed countries fund. 80%. 80% of the Special Climate Change Fund and 90% for the Adaptation Fund. So, when I say Europe is in the lead, these figures show that clearly. We're in the lead, and we are also here at the Paris rendezvous. I'm confident that this year and next will show a continuation of the increasing trend. Member states have recently announced new pledges to scale up climate finance. Those announcements amount to a significant scaling up of commitments, and in quite a few cases, even a doubling. Yet, even as traditional donors scale up climate finance, more countries will have to assume greater responsibilities. More players will need to get involved in line with their own evolving capabilities. In that context, we will need increased transparency on all development assistance in order to ensure that our green flows of financing low carbon economic development are not offset by brown flows of investments that are not pro-climate proofed. The investment needs for a global low carbon transition are, we know that, larger than public coffers are deep. That's why unlocking private finance will be essential for achieving the scale of investments we need. This requires improving investment in all countries. The EU is working both internally and with partner countries to this end, and we want the Paris Agreement to send the clear signal to investors that the policy environment in all our countries is going to be aligned to the 2 degrees Celsius objective, which is the other part of the negotiation, and we want that commitment to be really a constraint. That's important. It is difficult to see this shift happening without a broad move towards, which means a positive price on greenhouse gas emissions. Let me conclude by thanking my distinguished colleagues from the European Investment Bank, which is our bank and a major actor in climate finance. And I know that Werner Hoyer is personally committed to that. We had the occasion to sit together close to each other in Lima in the ministerial conference organized there. I want also to thank the African Development Bank and the Green Climate Fund for participating in this panel today and for their permanent and intensifying cooperation with the European Commission and the European Union as a whole. The multilateral development banks are essential partners for climate finance, and they are increasingly finding ways to foster low carbon economic development. I cannot overestimate the importance of this welcome shift in investment policy. As we are showing today, a lot is happening in terms of climate finance projects already, and more, much more, will be done, must be done in the future. And the EU will continue to play its role to the full in this common effort. As I said, we are in the lead, but we want to stay in the lead, and we will stay in the lead.
Thank you very much, and thank you for those warm words. And yes, I will stick very much to my script, and therefore mention the projects, but I would have mentioned them anyway. You'll be pleased to hear. Colleagues, if world leaders reach an agreement here at this conference, this will be a momentous step towards protecting our planet, but it will only be a start because, as we've heard, to make true progress on climate change, financing is the key. And that's why in a joint statement earlier this week, the heads of multilateral development banks announced our intention to further mobilise public and private finance to help countries reduce greenhouse gas emissions and adapt to climate change. This capital will be allocated to low-carbon sectors that can also generate new sources of economic growth and create new jobs. And we're taking this approach because public banks such as ours have a catalytic role crowding in contributions from both public and private investors. And I would underline what Solomon was saying earlier on about not just the importance, the absolute necessity of leveraging in private finance if we're going to get the monies available which we need to make progress here. Climate action is a key priority for our bank, and it lies at the heart of what we do. As you just heard, we are actually the largest multilateral development bank, but we're the largest multilateral development bank also when it comes to financing projects and combating climate change. We expect to finance $100 billion in climate action investments over the next 5 years. Among the public development banks, we're also a unique institution because although, as you heard, we operate mainly in Europe, 90%, around 10% of our business, and that's 10% of a very large number, is in all developing countries and emerging economies where the EU has relations. And so we're therefore uniquely placed to transfer and disseminate knowledge and experience between our operations within and outside the EU. Alongside our traditional loan products, we've worked extensively with the Commission and with other public partners over the last decade to blend public funds with banking instruments. We were just talking about blending a moment ago and the importance of that. And that helps to increase the leverage of limited public funds on private sector investment. Maybe just a quick aside, I tend to interpret blending as mixing our money with other public money, which is frequently grant money, and then leverage as bringing in the private money or money from other sources which comes in alongside that. But maybe I don't want to digress too much on the terminology, but that's just it. I hope it clarifies a little bit. We've progressively built up experience in developing dedicated instruments for climate action, including on energy efficiency, renewable energy, and first-of-a-kind renewable demonstration projects. One example which I'd give here is the Private Finance for Energy Efficiency initiative, which is a risk-sharing instrument for investments under a joint EIB Commission proposal on debt for energy efficiency projects. Outside the EU, we've worked with the European Commission to set up the Global Energy Efficiency and Renewable Energy Fund, or GREF, and this is a fund of funds which provides global risk capital to unlock private investments in renewable energy and energy efficiency projects in developing countries and economies in transition. And the objective behind this is to get around some of the limitations which locally sourced financing sometimes presents. So let me give you an example here. One of the projects which is being supported by GREF is the Cougar Wind Farm in South Africa. This will light up around 50,000 South African homes, and the local communities are the first ones to benefit. More than 1,000 new jobs have been created, and 15 small and medium-sized local businesses have already benefited as a result of this investment. And more generally, beyond the European Union, we are active worldwide and provide well over 2 billion, as you saw on the video earlier on, in climate finance every year in developing countries. Our focus outside the EU in this regard is set to increase. At the World Bank annual meetings in Lima, we joined the pledges by other multilateral development banks to increase our climate finance. We will be increasing the proportion of our lending in support of climate-related investment in developing countries from 25%, which is where it currently is, to 35% of that lending by 2020. And at the same time, the bank will maintain its target of at least 25% of its overall lending being devoted to climate action projects, which last year amounted to over 19 billion euro, or maybe 22 billion, 23 billion US dollar, depending on which exchange rate you're looking at. And I should say also that while the remaining 75% of what we do is targeted towards other policy objectives, because we mainstream climate action throughout our entire portfolio, we assess possible environmental risks and integrate broader climate considerations in all the operations which we consider for financing. Another project I'd just like to mention, and I'm confident we'll be seeing more projects of the quality of this, is the Lake Turkana wind farm project, which we're financing in cooperation with the African Development Bank. And this project is helping to transform the supply of renewable energy in East Africa. It's now the largest single wind farm in sub-Saharan Africa, and it's expected to generate around 20% of Kenya's power and provide 300 million megawatts of reliable, low-cost wind power to the Kenya national grid. We also look forward to accreditation as an implementing agent for the Green Climate Fund. In particular, as I mentioned earlier, we've built up considerable expertise in blending donor funds with banking instruments. We hope to be able to put this experience to good use within the Green Climate Fund. And here, another example, my last example, as part of the Sustainable Energy for All initiative, the bank has been developing a pilot program in sub-Saharan Africa to attract private sector investment into small-scale renewable technologies such as run-of-river hydroelectric power. This joint UNEP-EIB Renewable Energy Performance Platform is due to start in the first quarter of 2016, and it specifically aims to increase the access to risk mitigation products for small project promoters. To conclude, we have a strong track record of products and instruments to overcome barriers to financing climate action. We also have the due diligence in place to ensure that climate benefits are maximised across our portfolio. We'll continue to build on this through our new EIB climate strategy, which was approved by the board in September, and that is guided by the EU's climate and energy policy goals for 2030, and it focuses on 3 areas that will aim to further improve the impact of our climate financing of adaptation, and further integrating climate change considerations across all of the bank's standards, methods and processes. So I'd just like to finish there, but please allow me to conclude by saying that the EIB is ready to stand with everyone to contribute to a successful outcome of the Paris conference and indeed beyond. Thank you very much.
Very appropriate financiers, very appropriate public sector